This conference will now be recorded.
Hello and welcome to today's lesson on investing for retirement, provided by Gordon Asset Management, your retirement plan advisor. In this video, we will cover general portfolio construction, the investment options available, how to get help, and finally, how to change your investments. Regarding investment construction, the investments offered in your plan are what are known as mutual funds. Now, mutual funds are investment vehicles that are made up of a collection of stocks, bonds, and/or alternative investments. For those who are not aware, stocks or equity investments are ownership shares in a company. Stocks will increase or decrease based on the value of the underlying company. Now, bonds or fixed income are the other primary investment type and are debts issued by companies or governments. With bonds, investors lend money in exchange for interest payments received while the money is being lent. Some mutual funds will utilize other alternative investments such as real estate, commodities, etc., which can help to provide additional diversification. Now that we have a general understanding of the primary types of investments, let's take a look at portfolio construction. So the graph shown illustrates historic performance of various asset allocations dating back to 1926. Allocations range from a 100% bond portfolio to a 100% stock portfolio. For each asset allocation, we have listed the average annual return in addition to the best performing year as well as the worst performing year. The general takeaway here is that it's very important to know that bonds tend to be more conservative investments with less fluctuation or less volatility as compared to stocks, which are more aggressive. That said, while stocks can come with greater risk, they also tend to provide higher average annual returns, especially when you're looking at periods of 10 years or more. Putting this to practice, those who are farther from retirement with more time to ride out the risks may want to consider a portfolio more heavily weighted to stocks to take advantage of higher expected average returns over time. Whereas those who are closer to retirement and have less time to ride out the risks may want to consider a higher allocation to bonds in their portfolio. Looking at the investment options available in your plan, the menu is designed to accommodate all types of investors. Often referred to as passively managed, index funds are available for most major asset classes and are investments that simply track a stated market index, for example, the S&P 500. These funds tend to be ideal for investors looking for market exposure at a very low cost. Actively managed funds are available as well. While they tend to have a higher expense ratio than index options, these funds have managers who are actively making investment decisions and changes to the fund's holdings. Target date funds are provided for those who would prefer more of a do-it-for-me option, and these funds will be explained in greater detail later in the video. Lastly, every menu is equipped with a cash or stable value fund option for highly conservative investors who may wish to eliminate market fluctuations. A list of available investment options can be found by logging into the MVP website and selecting Advice and Performance located under the Learn tab. This page will provide information including the expense ratio or cost to invest in each fund, as well as performance through the most recent month end. For additional information, you can click the icons under the links column to be directed to a website called Morningstar, which will provide everything you really would want to know about the fund, including holdings, daily performance updates, manager background, etc. With a 401k plan, you're in charge of managing your investment allocation, but there are certainly options to get you help. For the do-it-for-me investor, you may want to consider a target date fund, which is a fully managed investment option that gradually becomes more conservative as you approach retirement. For the Help Me Do It investor, we would encourage you to check out the SmartPlan tool, which will provide you with investment advice based on your personal situation and risk tolerance. And finally, for the do-it-yourself investor, you're welcome to go in and select from any and all of the investment options that you'd like, but I just want to make it clear that we're a resource available to you, and always welcome to reach out if you would like some professional guidance or a second opinion if interested. The target date funds are your plan's default investment, meaning that all contributions will be invested in the age-appropriate target date fund unless you go in and elect otherwise. These funds operate by taking your year of birth and projecting that out roughly 65 years to estimate your targeted retirement year. So for example, let's consider an individual born in the year 1980. As we can see, they would be defaulted into the 2045 target date fund, as this is the year they would be turning age 65 and likely very close to, if not already, retired. I do want to note that while this chart provides general birth ranges for target date funds, we would encourage you to refer to your plan's QDIA notice found on the website for your plan specific dates. As mentioned before, these funds gradually get more conservative as you approach the targeted retirement year. Take a look at the chart shown, which plots equities or stocks shown in the blue and fixed income or bonds shown in green. Sticking with our example of an individual targeting retirement in the year 2045, we can see that now when they're farther away from retirement, or roughly 25 years, they're heavily invested in stocks. However, as they get closer to retirement, the allocation begins to shift to a greater allocation to bonds. This ties to our earlier point that individuals with more time can afford to take greater risk in hopes of achieving higher average returns over time. However, as our time horizon shrinks, the ability to take risk also shrinks. The main reason being that if we were to experience a severe market correction, you don't have as much time to ride out that risk and let your account recover. Often the majority of individuals choose to just stay in these default options since everything is handled for them. And quite frankly, if you're somebody who's not going to be keeping up with the market, this is likely going to be the best solution for you. If you do decide that you would like to move out of the target date funds but are not comfortable selecting on your own, we encourage you to check out the SmartPlan advice tool located under the Learn tab on the MVP website. Please note we have a specific video covering the SmartPlan advice tool in greater detail, so I'm not going to get too far in the weeds on this video. I did just want to mention that the tool is available to you free of charge. It will simply ask you some questions about your finances as well as walk you through a risk tolerance questionnaire to ultimately provide you with custom investment advice based on your personal situation. For the do-it-yourself investor or somebody who simply wants to make a change to their investments, you can do so on the MVP website by selecting your portfolio under the Manage tab. Here you have the option to change your investment election by selecting Portfolio Rebalance. You also have the option to set up an auto rebalance if you'd like to have your portfolio automatically rebalanced semi-annually, quarterly, etc. In addition, you have the option to make direct fund-to-fund transfers as well. Typically, those who are looking to make investment changes, portfolio rebalance is going to be the option you're looking for. So that's what we're going to discuss on today's video. Simply click Take Me There to bring up the list of available investment options. The column titled Balance will list your current balance you have in each investment. The column titled New Percentage is where you will need to enter how much you would like to invest in each fund. This will realign the current portfolio. And if you'd like to also have all future money invested the same way, be sure to select Realign Future Elections as well on the next page. Regarding the timing of the changes, typically if trades are placed prior to 3 p.m., they'll go through at the end of the business day, whereas trades placed after 3 p.m. will go through at the end of the next business day. So that's it for today's video. For questions regarding the plan, you're welcome to reach out to your HR contact or your plan service providers listed here. Gordon Asset Management, again, the advisor on the plan, is your primary resource for any and all questions related to the investments or retirement planning. MVP, which is the record keeper and administrator on the plan, will be your go-to for any operational questions, website questions, or questions related to loans, distributions, etc. If you're not sure who to reach out to, just call one of us. We'll get you in touch with the right person. But that concludes today's lesson on investing for retirement. Thank you for listening.